Assalamu alaikum warahmatullahi wabarakatuh. Dear student, how are you? I am fine. Welcome to Finance and Banking online class. Today, I am going to start a new lecture. The subject name is Finance and Banking and chapter is Share, Bond and Debentures. It is most important chapter. Basically, business studies students and class 9 and class 10 student. Uh, you know that the some creative questions, the first part and second part, it is also mentioned the second parts, banking sectors. Others was share, bond and debentures, mathematical problems, just like of cost of capitals. Here also uh, there are sources some sources for collecting money, just like common shares, preferred shares, then debt and return earnings. So student, have in this uh, from these chapters I am also describe the character of general shares, priority shares, bonus shares and right shares. I am also describe the difference between bond and debentures. So today, I would like to describe the system of investment in shares. Student, you know that there are two kinds of share markets. One kind is primary markets. The another kinds is secondary market. So, in the view of investor, there are two kinds of market. So, first or IPO markets, the secondary market. IPO, I mean, it's the full form of IPO is initial public offering. So, student, now I would like to describe the primary market. Student, at first I read the textbook. Here, the primary market means that market where a company announced the initial public offering for the selling its shares. When a company sells its shares in the market for the first time, that offer for selling called IPO. If an investor buys shares by participating in the IPO offer by any companies, it's considered that he has both primary shares. Student, this is easy concept. It initial public offering or IPO, I mean, when a companies at first introduced or when a companies at first times collected money by issuing shares in the share markets, it's called new shares or it's called IPO market shares. I hope all of the student you can understand. The second question is what is IPO or what is the full form of IPO? So the full form of IPO is initial public offering. Initial, I mean, immediately public offering or new shares offering. It's called IPO. Okay, share student. When you ask just likes of questions, IPO is what kinds of market, what kinds of shares. IPO is the primary shares, and IPO shares which market which market sells or buy. You can easily answer the primary markets IPO shares buy and sells. Then the another questions may be uh, created just like what is the primary markets or what kinds of shares can sales and buy in the IPO market or primary markets. A fresh share or a new shares can sell and buy in the IPO market. So student, now the secondary market, this is the important markets. After selling shares for the first time by a company in the investors, the investor can buy and sell shares among themselves. This is the important message for you. The what kinds of shares can sell in the secondary markets. Secondary markets just like so when companies issue first time share or fresh share, when the shareholders, I mean the persons who purchase the IPO market shares or the fresh shares, if the shareholders wants to sell or buy any shares in the share markets, then he sell or buy the shares in the share markets. It's called secondary markets. So secondary market shares, it's not fresh shares, it's also used shares or um, any one or any persons who buy the shares in the primary markets, then he whenever he buy or he wants to sell the shares and collected money in liquidity capitals, then he sells in the secondary share markets, and he may be collected or he can collected money as a liquidity or as a cash asset. This is the important market because of when a customers or when a shareholders purchase IPO shares, if uh, the shareholders needed initially money, or if the shareholders need urgent money, then he can sell initially shares in the secondary share markets and they collected money in cash. So this is the important platform to sales and buy shares in the share markets. The that is the secondary market. I hope student you can easily understand. Student, now I would like to describe the dividend and dividend policy. Dividend, student, you know that there are two kinds of uh, there are two kinds of part uh, whose dividend in the net incomes. I mean, when a company sells any product, then he deduct all of the expense, just like of current expense, fixed expense, then depreciations. Then the companies get earning before tax. Then he deduct or he or she deduct tax, then the companies will get net profit. So when a companies make or when a companies earn net profit, then he divided or he divided the net profit between two parts. One part they also uh, give or they also pay the to the shareholders, it's called dividend, and another part the companies will remain in their treasures or in their savings, it's called return earnings. So student, a company, when a company make profit, they also uh, declare the dividend in the proportions of their shares or in the price of the shares. So there are some different kinds of dividends, and the companies also declare dividend uh, in the view of different way. The first uh, the first uh, so student, the first is cash dividend, then second is the stock dividend. So student, the first is cash dividend. You have to know what is cash. What is cash? Cash, I mean the liquidity assets or initial amount of taka, it's called cash. So student, cash dividend, the dividend which is paid in cash money is called cash dividend. For example, suppose that a company is announced 10% cash dividend, an investor holds 500 shares of that company, of each share price is 10 taka, that investor will get 10% into 5 thousands, or I mean 10 thousands into 5, 10% into 5 thousands, it will be or is equals 500 taka as cash dividend. When a shareholders will get profit as a money, it's called cash dividend. Then another important topic is stock dividend. Student, this is important and very important topic is what is stock dividend. Stock dividend is not cash money or it's not liquid, it is money. It is the alternative process in a financial managers whose process apply and give the dividend to the shareholders. Many a time a company gives stock dividend instead of cash dividend or stock dividend side by side with cash dividend. The companies usually gives stock dividend in proportions with shares issued at present. As a result, the number of shares of the companies increase. Suppose that a company has at 10% has present 10 million shares of a face value 10 taka. The company announced 50% or 2:1 portions of stock dividend. I mean, uh, one shares is issued against two shares. I mean, when uh, a persons have two shares, then he will get one shares as a stock dividend. It's called two portions one of stock dividend. As a result, if an investor has 500 shares at present, after getting the dividend of number of his shares, uh, he will be get total 750 shares. I mean, uh, two shares he will get one share, then four shares he will get two shares. uh, uh, for this examples or just likes of this 100 shares he will get 50 shares. By the way, uh, 500 shares, then he will get 250 shares. So when we added with 500 shares with 250 shares, then we will get 750 shares. In this way, the total shares increase by the companies will be 15 millions. So when a company give stock dividend, ultimately then the company's share will be increased, and company they uh, uh, they make profit or they need profit or they preserves amount will be increased or retained earnings amount will be increased. So student, the next important topics is the dividend policy. Dividend policy, there are different kinds of dividend policy in the view of different ways. The first is a company has to take dividend related various decisions every year. For example, what portions of profit will be given as dividend, whether cash dividend or stock dividend will be given. It's for taking those decisions, every company has particular policy which may give directions to give dividend. Those policies those policies are called dividend policies. Usually, three types of dividends policies are found, such as fixed money dividend policy. Fixed money dividend policy, this is an easy process to give the dividend among the shareholders. First is, according to this policy, every year equal amount of money is given as dividend. For example, if a company give 10 taka dividend per shares every year, it will be called fixed dividend policy. Whatever more amount of money a company may earn, it gives same amount of dividend as was given in previous years. However, in these systems, the amount of dividend usually doesn't decrease. This is an easy system. If I give you example, just like so, if the company declares 10 taka dividend against each of the shares, then the shareholders know before he will get dividend, he know that they will get a certain rate of dividend or certain amount of money as a dividend. The second important topic is dividend payout ratio policies. According to this policy, a company decides what portions of its profit it will give as dividend. As per the decisions, every year the company gives dividend proportionally. For example, suppose a companies decide to give at 50% proportional rate. As a result, if one year the company earn 20 million taka, then it will give the shareholders 20 millions into 50% or 10 million taka as dividend. Fixed dividend along with additional dividend policy. This is an ideal dividend policy for those companies which have no fixed or regular incomes. According to this policy, a company gives an additional dividend every year in additions in a minimum fixed dividend. As this dividend policy is such flexible than others dividend policy, many companies adopt this policy. Student, this the last important topics, this is most important. Just like so fixed dividends, there are another characters is additional dividend policies. We know that the price of the monies is there day by day decreasing for these regions. Every year the company wants to give the more or wants to increase the percentage dividend which is given among the shareholders. So student, I hope all of our understand and know more today. Stay safe. Allah Hafiz. Assalamu alaikum wa rahmatullah.